Welcome to the Dollar Debauchery program, brought to you by Cliff Cool's Notes, a daily consolidator on the most insightful presentations, articles, essays, and the interviews on the web on the ultimate confidence game, money. Our site presents ideas from the smartest and wisest money managers, economists, and analysts.
Welcome to the Dollar Debauchery. My name is Alison Holditch, interviewing on behalf of Cliff Cool. Today I'm interviewing John Rubino. He's the manager of dollarcollapse.com and co-author of The Collapse of the Dollar and How to Profit from It with Gold Money's James Turk. John is also the author of Clean Money, Picking Winners in the Green Tech Boom, How to Profit from the Coming Real Estate Bust, and Main Street, Not Wall Street. After earning a finance MBA from New York University, John spent the 1980s on Wall Street as a Eurodollar trader, equity analyst, and junk bond analyst. During the 1990s, he was a featured columnist with TheStreet.com and a frequent contributor to Individual Investor, Online Investor, The Consumer's Digest, among many other publications, and he currently writes for CFA magazine. John has recently co-authored another book with James Turk called The Money Bubble, which brings us here today. John, you've recently come out with your new book, co-authored with James Turk, called The Money Bubble. What is the motivation behind writing this book, and what points, message, and advice are you trying to get across?
Well, James Turk, who runs Gold Money, and I wrote a book called The Coming Collapse of the Dollar back in 2004. And at the time, the numbers were so outrageous. You know, all these imbalances had built up around the world. We thought that a financial crisis was coming, and that it would be the final financial crisis of the world of fiat currencies and paper money created by governments and increasing amounts of debt year after year. And we got a crisis in 2009. A lot of the predictions of the book did come true by that time. But it wasn't the final crisis. The central banks of the world and the governments of the world were able to pull out some really experimental monetary and fiscal policy ideas and stave off a global financial collapse by basically issuing another 20 or 30 or 40 trillion dollars of debt, depending on how you calculate debt. So they basically have dug us in an even deeper hole in an attempt to avoid a collapse that would look like the 1930s. So James and I decided that enough had happened in the previous 10 years that we could write another book that in some ways says the same thing, but with all new material, because so much amazing stuff has happened in the last decade that we certainly didn't think was possible. And so in other words, the story has become even better than it was back then, and our situation is even more dire. So we decided to sit down and put together a new book that explains what has happened in the last 10 years, how we got here, and what you can do about it if you've got some money to invest or you've got some assets that you're not sure what to do about, and how you can at least protect yourself and possibly make a lot of money in the big crisis that's coming now, because the past asset bubbles that we've lived through for the last 30 years have basically been narrowly defined into one asset class: junk bonds, tech stocks, housing in the most recent bubble, but they've taken place on the stage of a much bigger bubble, which is fiat currencies. The governments of the world have been creating more and more currency year after year, and have been able to get away with convincing us to treat that currency like it's real money, when it's not. It's just basically make-believe. It's these pieces of paper or bits in computer databases that we are treating like gold and silver or other forms of real money, but they're not. They're becoming increasingly irrelevant in the world, and at some point people are going to figure that out, and it's going to blow up, and that will be the bursting of the money bubble. And because it's money, it's all of our money rather than just a narrow asset class, it's going to be the biggest bursting of a bubble that we have lived through, and possibly that's ever happened in the global financial system in human history.
Why is it a question of not whether this fiat currency money bubble will collapse, but what form the crisis will take?
Well, by now the numbers are just so outrageous. There is so much fiat currency floating around the world that it has taken on the characteristics of a classic financial bubble. The price of assets denominated in these currencies has gone through the roof, and the amount of currency out there has soared to really unprecedented levels, and all kinds of other things are going on that traditionally point towards the imminent bursting of a bubble. And so the question really is not whether it'll burst, as you said, but when and how. And so what has happened in the last 10 years? One of the reasons that this book was such an interesting story to tell is that a lot of theories have sprung up to explain how things are going to unravel. We've got the currency war and the Austrian economics crack-up boom and the variable rate world death spiral. These are the names of chapters in the book that explain how things might blow up using different lenses and different indicators. And we make it clear in the book that none of these scenarios is guaranteed to be perfectly accurate in terms of explaining how things are going to go. But they're all useful as different lenses with which to view the system. And they all give insight into what might happen and how it might go. But it's really important to understand that nobody really knows exactly how this is going to happen because we've never been here before. The world has never had this much bad debt to deal with, which is incredibly deflationary. And the world has never been armed with unlimited fiat currency printing presses in every major country, which is incredibly inflationary. And you've got these two forces out there kind of contending right now in the global financial system. The natural tendency of the system as it is deflationary. All this debt wants to collapse, and that would take us back into the 1930s or something worse. On the other hand, all the new money that's being created by these central banks armed with their fiat currency printing presses is incredibly inflationary. And in the absence of a lot of bad debt that's going bust right now, would send price levels through the roof and cause asset bubbles to blow up everywhere and cause a destabilizing hyperinflation. And it's not clear which of these forces win. James and I think that probably the unlimited printing press ends up trumping the huge but limited bad debt collapse, and that we get a massive global currency crisis at some point in the not too distant future in which the value of the dollar and the euro and the yen really begin to tank, and that causes all kinds of financial crises for people with money to invest and people whose jobs depend on the smooth working of the financial system and pretty much everybody else. So the only thing that you can say with certainty is that some form of chaos is coming. And our goal is to help you navigate the chaos and protect yourself and come out on the other end with your capital intact and probably or possibly much increased.
How did the bigger money bubble form? Was it politically driven? Was it largely the result of policies by the Federal Reserve and other central banks?
It's the direct result of us handing fiat currency printing presses to all the world's governments and central banks. It's human nature to be corrupted by power. And really, the ultimate power is to be able to create money, the ability to create money out of thin air. And that's what we gave these guys back in 1971 when the U.S. broke the final link between the major currencies of the world and gold. So henceforth, every major currency was just paper, not linked to anything real and completely dependent for its value on our perception of the government running a given currency's willingness and ability to manage it prudently. And because people are corruptible, giving these guys that power has inevitably led them to create enough new money to win each new upcoming election and then borrow enough new money to cover the interest on the new debt that they've created in order to win each election. And so you've seen debt levels soar all around the world and money creation soar all around the world, which is exactly what you would expect with that kind of power in the hands of fallible, corruptible individuals. So it was completely predictable that we would be here. And now the end game is also completely predictable, is that these currencies have been so mismanaged that people are going to figure it out. They're not going to want to hold them anymore. They're going to dump them as soon as possible by converting them to real assets. And we get something that looks like a hyperinflation in which the value of currencies plunge and the value of assets or the price of assets when denominated in those currencies soars.
What has been the effect on investments from the fiat currency bubble bursting? What investments would you recommend, and can you go into good detail of this?
Yeah, the crucial thing to understand about what happens when a fiat currency fails is that capital flows out of paper assets or financial assets, which are, say, bank accounts or money under the mattress or bank equities, and money flows into hard assets like oil wells and gold mines and precious metals and farmland, because those things, the hard assets, can't be created in infinite quantities by governments. So their value can't be impaired, and they don't require someone else to keep a promise to hold their value. So people figure it out. They get out of fiat currencies and other financial assets that depend on fiat currencies because they require people to keep promises, and nobody's keeping their promises anymore. And so what we'll see going forward is real assets going up in value when measured in local currencies, and financial assets that are valued in local currencies and depend on local currencies for their value going down in real terms. And so this is going to be a great migration. That's the title of one of our chapters. And over time, it will shift the center of gravity in terms of global wealth away from the banks and the brokerage houses and the central banks of the world and towards the owners of real assets. So the specific ways that you want to change your financial structure personally in order to take advantage of this is to, one, buy precious metals, because those are the kinds of money that we always go back to when we're in the process of destroying fiat currencies. Two, invest in things like farmland and commodities mutual funds, especially hard assets like energy-related assets, and possibly gold mining and silver mining stocks. And three, pay off as much debt as possible, because in the uncertainty to come, there's no guarantee that you'll keep your job or your assets will be worth enough or your cash flow will be worth enough in real terms to cover debt. So it's better to be debt-free. So we recommend paying off your debts, shifting out of things like bank accounts and bank stocks and brokerage accounts in general, and into hard assets. And also to diversify among several countries, because you never know which country is going to get the craziest when something like this happens. And if your country happens to be one that really starts confiscating assets when the government panics, like a lot of countries are contemplating now, then you're kind of stuck. Even if you make the right decisions, they're still going to come and take a big chunk of your wealth. So you want to diversify, not just among asset classes, away from financial assets and towards real assets, but among countries too. If you have the capital to do it, buy some real estate overseas, store some precious metals in a insured vault in a country like Singapore that's less likely to become rapacious and start looting its bank accounts as, say Great Britain or big parts of Europe or the US probably will in the near future. And if you do all of those things, you increase the odds of coming out at the other end of this with a lot of your capital intact.
John, where do you stand on the inflation versus deflation debate? Do you see one or the other as dominating now or in the near future? And how will this play out in the long term?
I think it's a fascinating debate because you've got these two, as I said, really titanic forces on either side of the global financial system. The natural tendency now is deflationary. The system wants to fall apart and have massive debt defaults that take us back into the 1930s. Meanwhile, the central banks of the world are flooding the system with newly created currency, which is very inflationary. And I think in the long run, inflation wins out, but I think we could have a very serious deflationary scare in the short run if, for instance, the U.S. tries to actually go through with tapering, and money flows from the periphery, from the emerging markets where it has flown or flowed lately, back to the U.S. we'll see a global deflationary crash in a lot of these peripheral markets that have been bid up by dollars and euros and yen fleeing their own country and looking for higher yields in Brazil and China and India. And that could terrify the global financial markets and make us think we're heading back into a global depression. But the central banks of the world will react to that with even bigger quantitative easing and even more extensive debt repurchases. And the governments of the world will borrow even more money. You'll see deficits soar and quantitative easing go through the roof. And given a little bit of time, that will be inflationary. And they'll probably overdo it in their panic. And that will lead us to the crack-up boom, in which everybody finally figures out that these fiat currencies are being systematically destroyed by their governments, and they just give up on those currencies, and they buy precious metals and maybe Bitcoin if that's still a functioning currency and turns out to work as well as it has so far, and other kinds of hard assets. So the long answer to your short question is that I think it's possible we have deflation in the short run and inflation in the long run, and then extreme inflation after that.
What do you make of the global economy, Europe, the U.S., Japan, the emerging markets, and how will these economic developments play out in the financial markets of each region?
Well, I think everybody's a mess in their own way right now. Japan has borrowed more money at the governmental level than any country in history as a percent of GDP. And so they've got a problem in which they need to maintain really low interest rates in order to cover their debt. And let their interest rates go up just a little bit, and their government budget will just be blown up. You know, their interest costs will exceed their tax revenue. And at that point, their system will just collapse. And they're not that far from that because they're now running trade deficits, which means they have to finance themselves somehow with overseas money, and overseas investors are going to want more yield than local Japanese investors are willing to accept now. So they're that kind of a problem. Europe has had relatively tight monetary policy for the last year, and they're dropping back into a recession at a time when they've got 12 or 15% unemployment in most of the major countries and 30, 40, 50, 60% youth unemployment in some of the really hard hit countries. So that's a prescription for extreme unrest and possibly the unraveling of the shared currency, the euro. And let that happen, and the global financial system will be thrown into turmoil because so many pieces of paper out there are denominated in euros, but they're originating from Greece or Spain or Italy. And if those countries leave the eurozone and go back to their old currencies, they will devalue their currencies dramatically, and those bonds or other kinds of paper that are denominated in Italian lira rather than euros after the changeover happens will be worth half or a third as much as they are today. And so you'll see the big banks that hold those things as part of their capital just get creamed. So Europe could be the linchpin of the global financial crisis. The emerging markets have seen massive inflows of hot money from the developing or the developed world because we've been creating all this money and just tossing it out there, and it hasn't really been doing much on Main Street, for instance, in the US, but it's been bidding up assets in Brazil and India and China and Thailand. And now that the money is flowing back to the US and out of these emerging markets, they're starting to implode. So these guys could be the subprime borrowers of this crisis. In other words, the subprime mortgages that blew up in 2007 and took down the global economy almost. That role could be filled by Thailand and China and Brazil this time around. And so they're terrifying. The U.S. is a total mess. You know, I think we've talked a lot about U.S. finances already. So suffice it to say that we could easily blow up before anybody else because we're that badly run. And so just about anybody right now could be the catalyst. And there's no way to know who it's going to be. But we can say with a fair degree of certainty that somebody will fill that role in the next decade.
John, what are the problems and challenges in Japan's economy and financial markets? Could Japan blow up first? What is the potential for confrontation between Japan and China? And really, how could this affect the global economy and financial markets within what time frame?
Well, yeah, if Japan blows up, they own $1 trillion plus of U.S. treasuries. So presumably they would have to sell a lot of their treasuries to get yen in order to deal with their domestic financial problems, which would cause interest rates in the U.S. to go up and the dollar to go down, other things being equal, and basically shift their deflation to us. So they would push us into a deflationary crash by selling a lot of treasuries. So that's completely possible. Now, for China and Japan to actually get into a shooting war is almost inconceivable. These are two of the biggest trading countries in the world. They're right next to each other. They're both fairly powerful militarily in the scheme of things, and they would conceivably suck in a lot of other countries, including the US, in a fight. And so there's no way to tell how that would evolve. And so that's something that, were it to happen overnight, and we would wake up here in the US and find the global financial system frozen up. So I'm praying that doesn't happen, because I have 2 draft age sons and I'd hate to see us get sucked into an Asian war. But it's, they're rattling sabers over there, and it's possible, based on history, that they could be dumb enough to get into an actual shooting war.
You recently wrote an essay about the U.S. private sector borrowing. Is it good or bad, and can you elaborate on that?
Well, the U.S. was taking on huge amounts of private sector debt leading up to the 2008-2009 financial crisis. And then homeowners and businesses decided they wanted to scale back because they were terrified by that crash. So they stopped borrowing, and that was going to cause the economy to drop into basically a depression if they kept it up. So the government stepped in and replaced all the private sector debt that was being wiped out with government borrowings. Washington basically doubled its debt in the space of 5 years and pushed interest rates down to 0. Now, this had the effect of stopping the carnage in the US and global bond markets, and lately it has convinced the private sector to start borrowing again. So now we've got the government still borrowing fairly heavily, and the private sector starting to borrow again, which means total debt in the US system, rather than shrinking as it really needed to from its record levels in 2006, 2007, is growing again. So if debt was the problem back then, it's an even bigger problem now. We're adding to the amount of debt in the world, and therefore the complexity and fragility of the global financial system. So it's not a good thing for the US private sector to be borrowing again, and it will accelerate the day of reckoning. And I think it's close, and even if it's a few years out, the crisis gets worse and worse as we add more and more debt. So it's not a blessing for us to get through the next few years without a crisis, because when it comes, it'll be even worse.
There is an emergence of a pension crisis across America. Can you explain how pensions are unsecured obligations? How could it all unfold? Do you see bail-ins, and will municipality services be cut?
Yeah, basically what happened was, starting 30, 40 years ago and continuing to the present day, cities and states basically bought labor peace with their public sector unions by offering extremely generous pension plans. And so that was fine for a while those people were still working, but now they're starting to retire, and the cost of unlimited health care for a lifetime for a retired teacher and their family, or a firefighter, making a pension of $95,000 a year, it just goes on and on, all these horror stories. These things are bankrupting state and local governments, and the state and local governments are basically lying about the extent of their pension problems by assuming that they're going to make more money on their pension fund assets in the future than they're probably going to. So if you assumed a 4 or 5% return rather than the 8% return going forward that these guys claim they're going to make, then the underfunding in these plans, in other words, the amount that they should have put away versus the amount they have put away, becomes gargantuan. It's trillions and trillions of dollars that we, in effect, owe and can't pay. And so these states are technically, and cities are technically bankrupt, a lot of them. And they just haven't declared bankruptcy yet, but they're getting there, because the amount that they have to put away just to cover their current obligations to their current retirees is growing year after year, and it's squeezing out other services. So the cops don't come on time, and the libraries are closing, and schools are grossly underfunded, and the roads aren't getting fixed. And that's today, and it's going to get much worse 3 years, 5 years, 10 years down the road. So sometime in the very near future, we're going to see a correction in the stock market, for instance, which lowers the value of the assets in pension funds and reveals them to be so grossly underfunded that there's no fix. And at that point, things start happening to state and local governments. They lose the ability to borrow, which means they lose the ability to fund current services with borrowed money and have to live within their means, which are right now completely inadequate. So the cuts will get huge. We'll see a decline in the U.S. to third world status in a lot of places where the services just don't work anymore. And the things we took for granted have ceased to exist. So that's coming very soon, and it's going to add to all the problems in the private sector and at the federal level and in the global economy. So we're going to see a perfect storm where things that are horrible but could be manageable in good times are going to blow up sequentially or concurrently, and it's going to overwhelm the system.
What are your thoughts on gold? Is gold money, and if so, why? And what's happening with gold moving from the Western world to the East? Why is China buying so much?
Well, gold is money. It's functioned as a store of value. That's where you put your extra wealth for 3,000 or 4,000 years now. And just because governments decreed in 1971 that it was no longer money doesn't mean it isn't. It just means governments have tried to fool us. And gradually, governments are losing the ability to fool us, and we're starting to go back to gold and silver. You know, those prices, even though they're down lately, in dollar terms are way up from where they were a decade ago. And they're going to go way up from here as all this paper that is going to be revealed to be worthless starts flowing into the time-tested forms of money that hold their value over decades and centuries. So China seems to understand this. They are the big buyer of gold out there in the world, although India and Russia are also sucking up quite a bit of gold. And right now, between those three countries, they're buying all the gold that's available in the world. They're buying everything that's produced by the world's gold mines and more. They're sucking gold out of the Western central banks, which in theory hold some gold as the basis of their monetary systems. And that gold isn't coming back. That's going into the central bank vaults in India and Russia and China, and into the vaults and other hiding places of private sector citizens in those countries as a form of savings against the day when their local currencies start to lose value. So we're seeing this mass migration of real money from west to east, and it's weakening the financial systems in the west and strengthening those in the east. So at some point, when things blow up, it's going to be revealed that the west has a lot less gold than we thought, and the east has a lot more gold than we thought. And so the center of financial power will shift from west to east. And again, that day is coming soon too. I mean, China is literally buying up gold that has been sitting in central bank vaults in the West for 20, 30, 40 years. You know, they're working their way back through gold that was put there a long time ago and is now disappearing. So I think that this will be revealed by one of several things. One, a default on one of the Western metals exchanges like the COMEX, where it turns out there just isn't enough gold to cover the futures contracts that are out there. Or it being revealed that some Western central bank actually has a whole lot less gold than they've been claiming, and people extrapolating from that central bank to lots of other central banks. Or a default by some big bank that was storing gold for customers, but in reality has sold that gold in the open market, and now when the customers want it back, they can't give it to them. So any of those things could happen to totally spook the precious metals market and send gold up by increments of $100 a day for a lot of days until it's several times what it is today.
So John, just one last question before we wrap up here. You recently stated that the Federal Reserve is not part of the government. It's owned by the big banks that it regulates. Could you please elaborate on that, and why is it a staged conflict if the Federal Reserve criticizes big U.S. banks?
Well, the Federal Reserve is actually a consortium of private banks. It is owned by JP Morgan Chase and Citigroup and Goldman Sachs. And the idea that it regulates those banks is pretty silly, because it's basically a division in a larger organization that includes the big banks on Wall Street and the big global banks, and the Federal Reserve and the U.S. Treasury Department. So one division doesn't generally police another division within a corporation when the first division is making a lot of money. So what's happening now is that the crimes being committed by the big banks and which the Federal Reserve is supposed to police have become so blatant that they know they need to at least appear to be controlling the excesses of the global banking system. So they're going in, the U.S. Justice Department and the Federal Reserve regulators are going into these banks and investigating and concluding that wrongdoing happened. And the big banks are paying fines, which amount to just a fraction of their profits, without admitting any wrongdoing and without seeing any of their people be named or sent to jail or anything. So these guys get to stay rich, they get to stay powerful, and these fines are basically just a cost of doing business. So it's all a charade. And the sooner people figure this out, the sooner the rest of the pieces will fall into place. This is one more part of a mosaic of bad behavior on the part of the people in charge right now that people are gradually figuring out. The government is lying to us about inflation statistics that they're blatantly manipulating, and all the big banks seem to be almost criminal organizations now. They're manipulating virtually every market out there, and they're getting away with it. And big corporations now are doing all kinds of things that we would have thought were illegal, and getting away with it. And the government is spying on us now and picking us up and putting us in jail without a trial and doing things that only a police state used to be able to do. And so if you add all of those things together, you come to a conclusion that the big systems aren't working for us anymore and that we can't trust them anymore. And at that point, we will realize that the biggest system of all, the facilitator of all the rest of this, is the currency. And when we lose trust in that, everything falls apart. So all of this is a piece of the same puzzle. And people are gradually, they're focusing on one piece or another, but they're gradually putting the pieces together to see the picture that we describe in the money bubble as a country or a world that has been corrupted by the ability to create money at will, and that has really gone off the rails, and that is on the verge of some kind of a catastrophic failure.
John, thank you very much for your great insights. Your thoughts have been very informative. On behalf of the Dollar Debauchery, I'm Alison Holditch.
Thanks, Alison.